Hello, everybody. This is Matt Heisey, owner of the College Funding Connection, and back today with part 7 of our 7-part video series. And if you haven't seen them yet, we haven't posted on YouTube and on Vimeo, but it would invite you to take a look at those. Nice overview of the financial aid planning process. But today, I wanted to finish up with the last piece, which has to do with retirement savings. So even though we're talking about college funding, it's important to understand that college funding and paying for college is very closely related to retirement savings and then retirement at some point. Either one can kind of interfere with the planning process. So continuing to fund your retirement savings while paying for your children's education is so important. If you haven't seen us before or heard of us before, we are the College Funding Connection. We're headquartered in Northeast Ohio and Brunswick, but we actually work with clients all over the United States. We just happen to be located in Ohio. But our contact number or information is right below. 866-305-2321 is our toll-free number. And then our website is collegefc.com. So the current problem, and there's a lot of surveys that are done in financial services, just kind of getting a kind of a pulse with the marketplace and what people are concerned about. And I've seen various ones over the years, but usually these two are in the top 4 or 5. And you can see on this list, number 2 is saving for retirement. So parents are very concerned about that, obviously. Pensions are disappearing. We got to have some other way to fund our retirement at some point. And then number 4 is saving and paying for college. So those are 2 really big ones that we have to be concerned with all of the time as we go through this process. And then the challenge, to make it even more difficult for us, is that the college costs are going up each and every year. Different numbers out there, but most of the studies I see are somewhere between 5 and 7% average, on average is the cost increase. And we all know that for most of us at least, our paychecks are not going up 5 to 7% per year. So these are a little dated from 2009, but you can see a public university was $20,000, an elite private college or university is $55,000. That's actually probably closer to $23,000 for a public and closer to $60,000 now for an elite private university. So before we get into discussions of retirement planning, we have to look at the college piece. And just like buying anything, and you have to, folks, if you think of anything or take anything away from this video, keep in mind that college is a purchase. Colleges are businesses and they're selling you something. They're selling you an education. So we don't go out and buy a car and just with no budget in mind, we're just going to spend as much as we want to. We don't go out and buy a house and just spend as much as we want to. In most cases, at least we should, have a budget in mind. What is affordable based on our income, our assets, our lifestyle, all those different things. So when you're purchasing something as expensive as college for yourself or for a child in your home, you have to understand what the colleges are doing to calculate that number. And the starting point is what we call the EFC, or the expected family contribution. And if you don't know what that is, go ahead back and watch some of our other videos, and we'll go into that in some more detail. But basically, it's the portion of your income and your assets that you will be expected to contribute towards the cost of college. That's the starting point for the school. They're going to expect those numbers from you. How do they get the numbers? They're going to use a financial aid application that you have to fill out. All of the schools use FAFSA. That's a federal application through the Department of Education. So it is a federal document that you have to tell the truth on. It's just like an IRS form. But you're going to have to put your information as parents, your financial information, and your student will have to put their information. There are very few exceptions where you as a parent will not have to put your financial information on there. So it's just one of those things you're just going to have to get comfortable with and used to. The other 2 that are used mostly by private schools are CSS profiles, and then one that came up just within the past couple of years, a program called the Consensus, which was put together by a group of mostly private, larger private institutions out there. But in either case, if you're looking at profiles or Consensus with the FAFSA, you may have to fill out 2 or even 3 applications for several private colleges and universities out there. For public schools, it's usually just the FAFSA. But they're all going to be looking at that base year, which is the full tax year preceding the year that you're applying for financial aid. So it is now July, but coming up this December and January especially, families will be filling out financial aid forms for their students. And what the schools are going to be looking for is income information the first full year just prior to that. So that's known as the base year. And then, of course, the colleges ultimately will be looking at how much financial need your family has in awarding a financial aid package. And that is basically the retail price, subtract out your EFC, and then you're left with the EFC number. So the retirement problem is that every dollar going towards college can't go towards retirement. So quite simply, why pay more to the college than you absolutely have to? But you would be surprised at how many families do because they don't know the difference. They just don't understand the rules well enough. So they just go ahead and write a check to the college because the college is asking them for money. So I'm going to go back to our car purchase or house purchase example. Just because a realtor says, well, you could get away with paying $100,000 for this house, but we're going to charge you $300,000. You don't just go ahead and write a check because somebody told you to. So you want to make sure you understand, at least you shouldn't do that. So you want to understand what the numbers are. Because over 4 years, let's say that you're looking at a public university, that can be $55,000. If you were able to redirect that some of that or all of that money that you would otherwise pay to the school, over 15 years, and looking down here at our assumptions at 5% interest, that could translate to $175,000 additional dollars you could put in your retirement account. A private, four-year private college or elite college, anywhere from $400,000 up to $700,000 that you could put in your retirement savings rather than handing it over to the college. Over 20 years, the numbers would be higher, and that can be even more depressing if you're not planning properly. And keep in mind that this is for one child. So if you have more than one child, I have 3, and then I have 2 that are pretty close in age, so there's probably going to be some overlap in college. Then that can make a big difference because there are credits out there for families that have more than one child in college simultaneously. So again, you want to understand that and want to see if that has any kind of benefit or means anything for your family financially. So what are they looking at? This is probably one of the more common questions I get from the families I'm working with. And the answer is that they're looking at pretty much everything, or at least they're asking about everything. They're certainly going to look at the more liquid savings that you have, checking, savings accounts, bonds, CDs. But they're going to ask about retirement accounts. We hear a lot about 529 plans nowadays. Is that going to help you or hurt you? And then as we get into the private schools with the institutional formulas like the profiles or consensus, they can even start digging into or looking at business assets that you have. So if you're self-employed, that can sometimes make a big difference for self-employed families or persons when it comes time to fill out financial aid applications and get aid. So what's the solution? Well, most of the time it comes down to really 2 simple concepts. Now, it doesn't mean the process is simple, but understanding it is relatively simple initially. I call it the hidden equity and then the hidden cash flow solution. It's amazing to me still when I start working with a client and with a family trying to help them through the process with financial aid planning. We really get down to some basic financial principles, looking at budgets, looking at debt, looking at all these things. And oftentimes I'm finding that there's hidden equity or assets the family isn't utilizing properly, and especially if it's being counted by the colleges, is there a way to turn that into a non-includable or non-countable asset so that you can get more financial aid in the process? And the answer oftentimes is yes, there is. But families don't do it because they fear change or they don't want to, they don't understand that that can make a big difference for them. The other part of this is hidden cash flow. How much of your cash flow is going towards bad debt? How much is going maybe towards the wrong type of retirement account at the wrong time? So there's all these kind of things that we can look at, and this can oftentimes free up additional assets and income for you then to redirect it towards other goals like retirement. So another common question I get is, should I seek professional guidance? Well, it's hard to answer that question without knowing your family, but let's take a look at other things in our lives. Do we self-diagnose and self-prescribe medication? Hopefully not, probably not. We go to a doctor that's trained to do this, that's been to college or school and has been on the job for a while and hopefully has a pretty good understanding. Do we write our own wills or trusts for legal matters? Again, hopefully not. You're going to a qualified, experienced attorney. When we look at college funding and the complexities that it brings up, especially with retirement planning, then it does make sense to seek out someone that understands this, and they're much more likely to help you and help you quickly if you need assistance. But keep in mind also that as a professional, they're going to have access to product and services that you absolutely will not have access to if you're not licensed to deal with it. Just like you can't go out and buy prescriptions yourself without working through a physician, oftentimes that's true with financial products and services as well. So does your family meet one or more of these guidelines? And I found that it's easiest to kind of put it down in writing for folks if they're looking for reasons to seek some professional guidance. Are you a homeowner with net equity in your home? That oftentimes can make a big difference, especially if your child's looking at a private school. Household income ranging from 60 up to even as much as $200,000. So sometimes people think that's too much money to qualify for aid, so they don't even bother filling out financial aid applications. And that oftentimes is not the case, especially if you're looking at private universities, and especially if you have more than one child in college or will have more than one child in college. If you have savings in excess of $30, the schools will let you have a small amount in savings, but if you exceed that amount, they will start assessing it and basically taking away financial aid from your family. So you want to know if that's going to make a difference and do some analysis to see if there's anything you can do to control how the assets are being viewed by the colleges. If you have a student with a grade point average of 3.0 or higher, that can make a difference for merit scholarships. And always remember, when we're talking about financial aid, we're talking about need-based aid, which we're covering primarily here in the videos. The other part is merit aid based on academic performance and credentials. So if your family does meet one or more of these guidelines, then I would consider professional assistance. Now, you have heard me say this before if you've seen my videos. Any reputable company out there should offer you a consultation for free. Usually it's a half an hour to 45 minutes to kind of go through, do an inventory of where you are financially. Don't be afraid about sharing that information. You're not getting into sharing account numbers or anything that personal, but you do have to share at least some basic information to allow the professional to do their job. So go through that process. And you're going to find then that that professional can tell you pretty quickly if whether they can help you or not, or they should. Because there's no point in getting into services if there's really not much that they feel that they can do. And the professional probably doesn't want to do that either. It takes time away from other clients and needs their help. But then also it's more of an ethical issue that why charge for something if you really can't help someone. So a couple action items for you today as for your family. Number one, I'd like you to take a close look at your family's EFC and determine if you and or your qualified college funding consultant can help you reduce your EFC. Is there a method or strategy that you can employ to do that? And if you can, it's going to free up hopefully some hidden equity. You're going to find some hidden cash flow. And then work with your consultant to find a way to redirect the income and assets away from unnecessary college expenses and then refocus on retirement savings or other financial goals and needs that you have. And then the next steps, if you're interested in learning more about the possibilities for aid and for retirement savings, we obviously do offer consultation services ourselves. Again, it is free for the initial consultation, so you can go to our website, collegefc.com. If you look at the top of the page, there is a Contact Us tab. Just click on that, enter your contact information. There's a space there for a question or comment that'll help give us some more information too of what you'd like to discuss. And then submit that, and we will be in touch with you to schedule a time to meet. And again, it's about a half an hour to 45 minutes typically. Or you can just call us if you don't have access in that way online. Feel free to give us a phone call. This is our national toll-free number, 866-305-2321. Or again, you can contact us at our website, which is collegefc.com. Also, just as an extra bonus, if you go to our website and you just want to get on our newsletter list, or we do have some free reports and articles and videos there, go there, and the one that you'll see pop up right away is the Student Roadmap to Success. And then we also have a monthly newsletter that is free to you called the Planning News. So feel free to sign up for those. You'll just get on our list. You can always opt out at some point if you change your mind. But again, that is free of charge. And then also the Contact Us page is there, like I mentioned at the top of the page, if you'd like to get in touch with us or schedule a time to meet or discuss your family situation. So thanks again for watching today, and best wishes to you, and we certainly hope your college planning goes well. Take care.